mama, I'ma make her proud. Then I went and told my shit to hold it down.
Alright boys, today this lesson is going to be on stock patterns. These are patterns that occur in a chart that for some reason investors get a hard on for, and it determines where price action could be headed to. There's no reason behind it, just all that matters is that investors get boners for these types of setups and such, and you can profit off of them. So that's all that matters. So let's get into it. The first thing we are going to look at is just a simple uptrend. Obviously a pretty easy one. As you can see, we have the two trend lines drawn, one on the bottom, one on the top. So we can see, the first point that is made on this uptrend is right here, and that's for the top, and for the bottom we got right down here. This is the chart from Microsoft back in 2000. I just typed in random shit, but you can see it went from $5 to $50 in a span of 4 years. So that's like, I don't know, you're 10 times in your money there. So you have $1,000, you go to 10 grand in a matter of 4 years. Given not everyone's likely to hit stuff like this, but it is possible. That's the moral of the story. But basically an uptrend is defined as a stock making newer highs and lower lows. So for example, alright, so we got come up, new high here, come down, it doesn't make a new low yet, come up, not a new high. Alright, so here's where we see the first higher low. So then, we start to come up, still making new highs, breaking past, I don't know, this looks to be about $6. So new high, here's a new low. New high, new low. New high, new low, new high, new low, new high, new low, new high, new low. So I hope we grasp what's going on here. Uptrend, stock making newer highs and higher lows. I hope I said that right. And then you draw these trend lines by connecting the lows together pretty much. Sorry, I'm trying to fix something really quick. So yes, you draw these where they make their newer highs and lows. Obviously, if you were to draw trend lines here, you'd be drawing them sideways. I mean, this is a yearly chart we're looking at here. But yeah, you pretty much you draw your bottom trend line on the lows, and you want to touch kind of the low areas. You don't want to try making it touch up here, because then you're gonna have the trend line all mess up. It can be hard to draw these lines accurately sometimes, just because you see sometimes it doesn't touch the trend line here for 2 months. It doesn't touch the trend line again for another year, it looks to be. So they can be tricky to draw, and sometimes you just do have to wait for them to fully form to get a proper one. Obviously it's a lot easier to draw it on a trend that's already happening compared to one that's happening, but still we just need to be able to recognize uptrends, stocks making higher highs and also higher lows. There's also a downtrend, obviously. This is a stock that's making lower highs and lower lows, obviously. So we see up here we got the high, then we come down here, we got a new low, and now we also have a lower new high, followed by a new lower low, followed by a lower high, all the way down obviously to here, and then we get to about here, we see kind of a high-bodied candlestick right here that could indicate, a breakout. Personally, I wouldn't buy it here. We have the three white soldiers right here, the three straight green candlesticks. They're not perfectly, the last one right here could be a little stronger looking, but regardless, you still have three straight candlesticks that are, pretty substantial moves, and we don't see anything like that. Um, we don't have three. I mean, we have three green candlesticks right here, but this one's kind of a doji. You have three candlesticks here, um, and I mean, still, you still could have locked in profit before realizing it was going to downtrend again on this move here. You can also see the huge come up we had here, but yeah, that's not the point. Downtrend, hope we got the point of that. So here's all the chart patterns. There's bullish patterns, aka going up. Bullish, like I said, attacks up, good. Bearish, bears attack down, bad. Bearish patterns go down, and then reversal patterns. We're only going to be looking at bullish patterns, just because that's what we're going to be playing. We're not going to be shorting stocks. Still, relatively important to, learn these, but for the most part, the steps we're looking at are going to be bullish patterns and things of that matter, or maybe we'll probably play some reversal patterns as well. Alright. Alright, so the first pattern we're looking at is a flag. A flag is an uptrend followed by a small pullback, and then followed by a breakout of the trend line into an uptrend. This is this is pretty normal in stocks. When you have a uptrend, you're gonna have some type of pullback, and that's only healthy to have. If you have just a huge straight uptrend, it's gonna fall back sometimes, and there's a difference between a healthy pullback and just a sell-off. A healthy pullback is, for the most part, gonna be not like a rapid sell-off of, for example, if we were to look at this right here, this is a pretty healthy pullback. I mean, it is pretty drastic. Obviously, we have this first sell-off, but it's followed by a decent recovery. I mean, obviously, you don't want to be in the stock anywhere in between this pullback stage. You don't buy in anywhere here. You buy in at the break of the trend line that confirms the uptrend. But yeah, like I'm saying, a sell-off would just, it'd go straight down and probably come all the way back down to, where it was at, and that's not healthy. But, if you just, have small, steady losses, you still keep your gains. You can see that this example right here held the first resistance point at this top right here, and then we see it hold the second resistance point at the end, kind of forming a double bottom. But yeah, so this is a pullback. Pretty much, the stock will explode, or I mean, yeah, typically it's off an explosion or a high spike in a short amount of time, and then you get a small, little downtrend. It's probably gonna touch each line, about three times on average, 2 to 3. Any more than that, and you're not in a pattern anymore. You're just in a straight downtrend. But yeah, pretty much the flag play, you're just looking for the break of the trend lines to indicate, the stock going back up. We can see it here. We have this explosion right here, followed by a small, little downtrend, and then we see stock come up, struggle for a little, but then you can see as time goes on and the volume starts to come in, we can see the price get pushed higher. And volume is something very important. Like I said, volume is something that we are going to be looking for, because when you have times of high volume, that usually means either buying or selling is going on. So, we're going to be looking for these green candles right here. A pennant is very similar to a flag, except for the pattern it forms. As you can see, the flag is just a straight downtrend, parallel lines. This is obviously a pennant formation, but the concept is still the same. You have some type of explosion followed by a pullback that starts to form a nice little pennant like this. Pretty much what it means is, once it gets to this end, the stock's just consolidating at this point. So, you have huge price fluctuations, then you come to an area of consolidation where we're wondering if the stock's going to go up or down. And obviously, like the flag pattern, we are looking for the break of the top trend line. We have it here too. As you can see, uptrend. This is called the flagpole. It's the initial big green stick. Like I was telling you guys, usually it's a pretty rapid explosion that leads into these patterns. And yeah, followed by, this nice little squeezing pattern that we see. And then, here on this example, we have 1, 2, 3 straight, 3 straight green candlesticks indicating an uptrend as well as a break of the upper support trend line. Ascending triangle, oh shit. Ascending triangle is pretty much a stock that has, I mean, it's pretty close to, the pennant, except, well, obviously the shape is different. I mean, I feel like it's gonna be hard to teach all of these after a while because it's just gonna be self-explanatory for the most part. Pretty much, the chart forms into these shapes. And I mean, all you need to do is recognize the shape, draw the trend lines. It's not that easy. I mean, obviously, you have to know where to draw them, and such, and how to play them. But yeah, so pretty much, we get a big uptrend followed by a mild pullback, and then we form kind of a double top here before coming down and establishing the bottom trend line. Then we come back here, we hit the high again, but this time we see a smaller pullback. So at this point, we'd maybe, you can consider this an uptrend right here. And then you have the break of either the top or the bottom trend line. As we can see in this example on the left, it has an arrow going up or down because they can go either way. I mean, typically this is bullish. This is a bullish formation, but it can, it can shoot down, but tendencies are to go up for the most part, and it can go down, but it's typically a bullish sign, so typically it's going to go up. As we see on the example on the right, we can see obviously that the stock did in fact break out and become very bullish. So this is an ascending triangle. There's also a descending triangle, which is the same exact play, except you pretty much just flop it, and so just to turn this upside down. So instead of it going up and doing like this, it would go down and do it like that, forming a descending triangle, which is typically a bearish move, but it also can be bullish. Like I said, it can go either way, but typically this play is going to be a bullish play, and you're going to go up, and there's a chance you're going to go down, but the pattern is more likely to go up. The ascending scallop, this play kind of ties in with stocks being oversold. You can see it's pretty much a dip play. The point of this play is buy at the bottom, sell at the top. Wait for let the stock decrease, and then wait for the stock to look like it's curling, both on all your indicators, as well as with the trend line, and also wait to see some candlesticks starting to curl and kind of look like a Nike swoosh a little bit. So Yeah, and then the bottom right corner, we see it again. You can see just, a dip, and um, I guess they curved the line like this just to, establish a sell point here. Uh, but yeah, so the point of it is pretty much just to dip by and then to ride that up. I like this play a lot. You see it a lot, and you can play it a lot. Then we got the cup and handle, pretty much a scallop. I mean, you can see the resemblance here. It's pretty much, it's the same for the first part. Where it comes in differently is the handle part. I mean, usually, typically you can see a scallop then eventually turn into a cup and handle, where, like I said, it has a pullback, a healthy pullback that we like to call them. Obviously, you don't want to sell if you want to pull back. But yeah, so pretty much you form a scallop, and then once the scallop is finished, instead of side trending or consolidating, you have the pullback followed by a break of the top trend line. You can see it again here. You got the scallop, pullback, kind of like a low-bodied spinning top here. So there was indication that there could be some type of reversal, and then you got the 3 straight green candlesticks. I think this should be the last one. This is the double bottom reversal. Pretty self-explanatory. Stock comes down, makes some type of new low, 52-week low, something like that. Bounces off the low. Here's a bounce play, something that I like to play personally. So we get the bounce, followed by another recession, and then we hit the same exact bottom, or if not the same bottom, a pretty similar one. So you hit once, come up, hit twice, and then you see an uptrend again, and it break. This graph down here is a little bit better of explaining what's going on. Pretty much you come down here, you make your new low, you set your level of support at 130. You come up, the highest you reach is 160, so that's your resistance right there. You come back down, and you see this long whisker followed by a pretty heavy pullback. So the stock opened here, took a gigantic dive, but the buyers came back in and bought the stock all the way up to here. So that long whisker is a pretty bullish whisker there, I'd say. And again, this is a nice bottom bounce play right here. And then you have a following uptrend where you go to 160, break the 160 resistance. Then the 160 resistance becomes a level of support, as we can see. Comes up, then it looks like it's going to go back down, but instead of going back down and going through, it holds the 160 previous resistance line, now confirming it as a support area. And you have the following uptrend, and then you have a gap down followed by an uptrend. So that's it for this video. 18 minutes, getting better, trying to get them faster and to the point for y'all. So yeah, so let me know if y'all have any questions about chart patterns, and also make sure to study some yourself and to look at actual plays. And later on, once I've taught all the stuff, we'll start doing more hands-on learning material with charts and actually looking at real tickers and looking at all of these examples on real tickers and things like that. We've already done a little bit of it, but it's just best to see the chart and do it from there. So